Hello, everyone, and welcome to another episode of Founders Grid, sponsored by Gaper.io. Today, we have Tom Soto. Tom is the founder and managing partner of DCIF. Tom, welcome to the show.
Thank you. Thanks for having me, Mustafa. Appreciate it.
So, brief about DCIF, and then we'll start discussing the founders' DNA, so that way the listeners can get a bit.
Sure. DCIF is Diverse Communities Impact Fund. We're a $300 million lower middle market growth equity fund focused in the area of impact. So we invest in technology companies that improve the quality of life by increasing access to better healthcare, education, banking, financial services, and credit, as well as improved environmental conditions. If it's not generating alpha, it's not generating impact. So we're very, very strong believers in capital plus leadership equals impact. We're located in the Valley, in Silicon Valley, and here in Santa Monica. And this is a first-time fund, but it's my fourth fund overall. My two previous funds were premier and first-time clean technology funds in the 2000s. And then I sold those funds to trust companies of the West and became managing director of their alternatives platform for a few years, and then left there to found Diverse Communities Impact Fund.
All right. So amazing. So, founders' DNA is something which I like to talk with seasoned investors like yourself, right? So we get to hear a lot of debate that, one coast founders are better than the others, or the one continent is better than the other. But since you have a lot of experience with dealing with so many founders over the course of time, do you see any common pattern between the founders' DNA, or is it true that one coast is better?
No, I mean, listen, after 20, 23 years of investing alongside other funds and into companies and founders, there's common denominators that you want to look for. The first, and it's not necessarily the technical things like a track record or the ability, it really is the compatibility of the team with one another, the compatibility of the team and the senior executives or the founders with the investors, their knowledge of the sector, not just their own IP, but, what are the trends? People like me, we don't invest where the hockey puck is. We're looking where the hockey puck's going to be, and we need to have founders that understand that, and we could be an extension of that vision, or they could be an extension of ours, but it has to be accretive. A founding mindset is not as good without the accretiveness of good investors who shouldn't be just investing capital, but investing spirit and culture and diversity amongst the future of what that company could be. So as much as I like to believe that founders could scale, it can't be just capital that helps them to scale. It has to be the contribution and the vision that the board and those investors bring to that platform.
Interesting. Unfortunate times because of COVID, and we're seeing in March, April, we were having a lot of discussion around the VCs are thinking of changing the investment thesis. One industry is going to perform more than the others. The cases are still not down; they're still at all-time high, but at least a roadmap or clarity is coming out there. So, which industries do you think would evolve in the next 3 to 5 years?
It's hard to say because, there's so much uncertainty, but the one thing that I'm certain is that there's going to be a lot of uncertainty for the next year. And, there's folks that say, well, we'll just wait till this pans out. And I tend to say, well, guess what? It's kind of panned out. This is it for a little bit. So we have to look at the trends right now. You have to look at earnings reports and see how they're behaving, how consumers are behaving. So we live in an era where you and I are on a Zoom call podcast. And, this is a company that had a market cap in January that was less than 10 billion. And at the same time, the top 7 airlines of around the world, United, American, British Air, Lufthansa, Qantas, Southwest, United, Delta, they had a combined market cap of $121 billion. And, 4 months later, here we are. And Zoom has a $48 billion market cap. And those same airlines have a combined market cap of $46 billion, $2 billion less. And, 2 weeks ago, Apple basically stated, basically marked itself at being $1.6 trillion in valuation. And the top 3 fossil fuel companies, Shell, Chevron, and BP, have a combined market cap of maybe $1 trillion. So, you see a complete shift in the way that fossil fuels are being affected as a result of all of this pandemic. The difference between this and 2008, 2010 is that this recession is not occurring due to lack of liquidity. Indeed, there's huge amounts of liquidity out there on the sidelines. It's just that the economics are being disrupted because there's a pandemic in the middle that is forcing the reduction in the velocity of economics and exchange. And once we're able to get our hands around the pandemic and maybe a vaccine and so forth, we'll see not just a recovery, but I think a very assertive recovery, not to say that it'll be a sharp V, but at least we'll be able to see deployment of capital. The sectors that I think are going to continue to scale are those that are really driven by IP. This is, capitalism without capital. These are not hard asset driven. They're very algorithmic IP-based platforms. And those that are in the area of remote economics, i.e. virtual economics. So remote education, remote entertainment, remote meals, remote banking and finance. These are the types of platforms that will continue to grow and scale as people feel less confident going into brick and mortar establishments to either be fed, do a transaction, and so forth. So, we have a company called SnapNurse that is a blockchain driven platform that matches nurses with hospitals in need of nurses. And, that has gone from, around $5 million in planned revenue for this year to $32 million. And it's mostly being because of the need for frontline nursing care on a real-time basis, which really hasn't been available. And now it is because of this platform that we have called SnapNurse. So I think as we move forward, we're going to continue to see greater remote economics. That is having a direct effect right on the value of the oil companies and fossil fuels. We're going to see a reduction, in the need for travel and hospitality services. So that's going to have some effect on a lot of public equities. It's going to have some effect on real estate portfolios and so forth. Alternatives, growth equity, impact, and ESG seem to be the ones capturing some of the momentum that is occurring as a result of the pandemic.
Amazing. Interesting. Any 3 pieces of advice that you're giving to your portfolio companies right now that you would want to share with the other founders?
Yeah, I would say first and foremost, it goes back to what we talked about, things being so uncertain. And when you're in uncertain times, make sure that you understand that your runway to scale and profitability may take longer. So it may be that, if we as a fund want to make sure that we have, we consider more reserve for follow-on investments because we don't know what's going to happen in the future. So you want a lot of headroom. For the companies, depending on what they are, we have some fintech firms. So we want to be monitoring our default rates and increase our mitigation. And then the type of exposure with the wider bandwidth of users and put some limits on who our users are and who we're lending to, for example. We want to make sure that as the shifts in the economy occur, that we're not asleep at the wheel, that our platforms and our founders are looking at these trends, because as you know, in IP, there tends to be more than one vertical that drives revenue. You know, there tends to be spillover. So as an IP scales, we find that some of that IP could be applied in other sectors and could be used and monetized there. So we don't want to miss those opportunities as the economy adjusts itself. There's opportunity for revenue to be generated in other areas. So, you know, I would be the mindful of those things, the lack of certainty, predict more uncertainty, the need for more headroom. So establish, you know, the ability to either create a reserve fund or have a austerity plan in place, not knowing what's in the future. And then depending on the sector that you're in, we're heavy fintech. So we want to, you know, with our lending platforms, we want to look at the exposure and mitigation that we have in place and see how we could boost it to avoid higher default rates and so forth. So, you know, there's a lot that you can say with that question, but I think you just have to be mindful of your full surroundings. And then, of course, giving the confidence to your staff, because when you're not in a central location and everyone is remote or distant from one another, that lack of community, of organization on site has an effect. You know, my office, we've been using Zoom since it came out because we're around the country and it's not a big team. You know, so, you know, I've always been a big booster of virtual and telecommuting and so forth. And I think it's going to have a long-term impact, as you've seen with the fossil fuel economy, right? It you know, people don't need to jump on a plane. They don't need to get in a car. They don't need to be on a train. And as a result, it's had a devastating effect on Middle East pricing and so forth. But I think it's more to come. And now people are asking the question, why do I need to live where I work? You know, when in fact, you know, you were telling me that you're, you know, just moving from San Jose to New York because you have a feeling, you just want to move, you want to change. And, you know, I could be here at my house in Santa Monica, you know, looking at companies that we have in Atlanta or Dallas or Northern California, the same thing. And given all the health reasons, no one can blame anybody else for not wanting to get on the plane.
Tom, take care of yourself. Thank you so much for being on the show. But, you know, my marketing team tells me I have to keep it within 10 to 12 minutes, but I'm pretty sure we could have talked for an hour at least. But thank you so much.
Wonderful. Well, Mustafa, thank you for having me, and good luck with everything. God bless.
Stay safe. Stay safe.